Okay, so today we are starting off with the new topic as we discussed in the last class, and that is balance of payments, right? So this is an easy topic, but sometimes students get confused with this. So we'll talk about what is balance of payments and what do we record in balance of payments, what is that? So we'll talk about all of these things, right? Are we good on this? Okay, walaikum assalam, Arbab, how are you? Okay, now have a look at this. So balance of payment, you will see in today's class that it has a strong link and relationship between exchange rate, right? But obviously, before we discuss the relationship between exchange rate and balance of payments, we need to know what is balance of payment. So balance of payment, let me give you an overview. So balance of payment is a document that records all international transactions of a country. Balance of payment is a document that records all international transactions of a country, right? Now think about this. Just like, I don't know if you guys take business studies or accounting or something, right? But you must have heard about things like balance sheet. Now, what is balance sheet? Balance sheet is a financial document that is maintained by all businesses, right? Across the globe. So all the businesses that are operating in the world every year or after every some time, they produce this financial statement, which is known as balance sheet, right? Now, the format, the way you record transactions and the way you record amounts in balance sheet is same for all the businesses, right? So it doesn't make any difference whether you are an online teaching business or you are a business like Amazon or you are a business like a restaurant or anything, right? So just like there is a prescribed format for balance sheet for all the businesses in the world, and all companies and businesses make their balance sheet in the same format. Similarly, balance of payment is a document that records all international transactions of a country, and all countries record their transactions in the same prescribed format. So let me quickly write down the definition and then move forward from here. Balance of payment is an official document. Balance of payment is an official document that records all international transactions of a country. It records all international transactions. Right. Is this simple? Okay. Now, what we have discussed so far, that just like there are different financial statements, and all businesses record their financial statements, make their financial statements in the same format. Similarly, balance of payment is a economy level, country level document that is obviously, as the word suggests, official. Is an official document that records all international transactions of a country, right? And all countries, if I have to include that over here, all countries prepare their balance of payments, in the same prescribed format. Prepare their balance of payments in the same prescribed format, right? And who has prescribed this format? It is the IMF, International Monetary Fund, prescribed format, right? That is the governing body, right? That looks after the balance of payments of different countries, and if any country is struggling with balance of payment problems, then IMF will give them loans and so on and so forth, right? So it is the IMF, International Monetary Fund, that has prescribed a format for all the countries on how to make the balance of payments. This is making sense, right? Okay, so we already know what is balance of payments. It's an official document that records all international transactions of a country, and all countries prepare their balance of payments in the same prescribed format. Okay, now this being said, we'll move forward from here, and we will quickly jump to what are the different accounts within balance of payments, how do we record transactions, and so on. So first of all, let's get very clear on what is international transaction. So this is not something that you should be confused with. International means anything outside your borders. So every time Pakistan trades with China, every time Pakistan invests in China, every time USA is, exporting to Pakistan or importing from Pakistan or anything of the sort, right? So all those transactions will be defined as international transactions, right? Sorry, I did not get you. Alba, what are you saying? So all exports, okay, imports and exports, you're saying, yes. So definitely it includes exports and imports, but international transactions include more than that. It includes more than that we're about to look at. Okay, now have a look at this, students. So there are 3 accounts, balance of payment. So I will use the short form BOP. Balance of payment has 3 accounts in which a country records all of its transactions. So all the international transactions are sorted in these 3 accounts, right? So balance of payments has 3 accounts in which a country records all of its transactions, right? Is this simple? Is this making sense? So all transactions of a not of a business, all transactions of a country will be recorded in these 3 accounts. Now, what are the 3 accounts? Let me list those one by one. So the first one is known as current account. The second one is known as capital account. And the third one is known as financial account, right? So these are the 3 accounts in which all international transactions will be recorded. Students, are you following me or not? Are you following me? Right? So as I said, balance of payment is a document that records all international transactions, and all these international transactions will be recorded in 3 accounts, right? How will we divide these transactions? That is what we are about to discuss. But first of all, you need to memorize their names: current account, capital account, and financial account, right? And financial account, right? Okay, are we good on this? Can you move forward from here? Okay, perfect, great. Net errors and omissions. Excellent, right? So that is sometimes, that's a very good question. That's another section of balance of payment, but oftentimes, Albab, जो net errors and omissions है, the net errors and omissions, sometimes it is considered as a separate section of balance of payments, but most of the times it is considered as part of financial account. Net errors and omissions, right? So most of the times it is considered part of financial account, net errors and omissions. So when we come to the financial account in a bit, we'll talk about what is net errors and omissions and what is the use of having this subsection and so on, right? Easy? Is this simple? Can we move on? Okay, now this being said, let's move on and let's talk about each one of these accounts one by one. So let's first start off with current account. So what is current account? Any idea? So student, what is current account? So current account is, have a look at this. So current account is the largest account, largest of the 3 accounts, right? So the most important, or you can say the most, valuable transactions are recorded in the current account out of the 3. Out of the 3 accounts that are part of balance of payments, the most valuable or the most, important transactions are recorded in the current account. How so? Let me explain you. So current account has 4 subsections. Very good. So it has trade in goods, trade in services, income, and current transfers. Very good. Exactly. It is related to exports and imports. Excellent, right? Students, are you following me? Now, after we have seen that there are 3 accounts within balance of payments, right? Current account, capital account, and financial account, we are about to move on and discuss each one of these accounts in detail, right? Now, within current account, as I said, there are 4 subsections. What are those? Let's first list these and then we'll discuss. Trade in goods. Then you have trade in services. So trade in goods basically includes exports and imports of goods. Exports and imports of goods. What are goods? Goods is anything that is tangible, right? That you can touch, that you can see, right? Another subsection of current account is trade in services, right? We know what are services. Services is anything that is intangible, which you cannot obviously see or touch, right? But these include things like education, healthcare, banking, insurance, legal services, right? So all these services in the world, if there is any transaction related to those taking place, then they will be part of trade and services. Then another section that you have is known as income, and the last section in current account is known as current transfers. So these are the four subsections of current account. Is everyone clear on this? Any confusion so far? Current transfers, current transfers. Okay, now let's just erase this. Okay, so these are the four subsections of current account. Okay, now, right. Yes, Abdul Rahim, let me give you an example. Think about this. That's a good question. So first one is very simple and easy to understand. Trade in goods में क्या है? Trade in goods में, let's say Pakistan exports wheat to, wheat, or let's say rice or any agricultural product, or let's say vegetables or fruits to another country. That would be part of trade in goods, exports and imports of goods. This records exports and imports of goods. This is fairly simple to understand. Exports and imports of goods, right? So when we import something, let's say we are importing cars from Japan or Germany or any other country, right? So that will also be part of imports of goods. Imports of goods, right? Is this simple? So that was the first one, trade in goods. Now, trade in services, we have services. Now, services can include education, healthcare, legal services, insurance, and so on. Now, think about this. Abdul, if a Pakistani student is going abroad to study, right? If a Pakistani student is going abroad to study in another country, let's say, UK or USA or any other country, don't you think it's an import of service? Because we are importing education services. So Pakistan is importing education services from that other country. Are you getting me? So if on average Pakistani students spend, let's say, $25 million every year studying in foreign universities. So if every year Pakistani students spend $25 million studying in foreign universities, so this is our import of education. This is our import of education. Does it make sense? Right? Great, perfect. Similarly, if we are, let's say, if I have to give you an example of, export, let's say. So if any Pakistani, online teaching, right? IT would be a better example. So if there are IT houses in Pakistan that are exporting or providing their services to people in another country, right? Pakistan, India, and all these countries are, big exporters of IT services, right? So what basically happens that there is a company based in USA, or there might be a company based in UK, and what they do is that instead of hiring their own people, because labor is cheaper in developing countries like Pakistan, India, so what they do, they outsource those things to our countries. Now, when our companies, right, Indian, Pakistani, Chinese companies produce those services for another country, so that is basically our export of services. Are you getting me, students? Are you getting me? Just give me a second. I'll be back real quick. Just give me 1 second. Everyone clear on this? Right, we're coming to that. Bob, yes, that's an important topic. Sorry, that is an important concept. So I'll explain it. Just give me a second. Great, perfect. Right. So is everyone clear on this? So we said, what is balance of payment? Balance of payment is an official document that records all international transactions of a country. Easy? Okay. Now, within balance of payment, we said there are 3 accounts that we'll talk about, which includes current account, capital account, and financial account. Now we have started off with the first one, which is current account. Now within current account, I said that there will be four subsections: trading goods, trading services, income, and current transfers, right? Income and current transfers. Okay. Now, trading goods may, what we record is exports and imports of goods, tangible goods, machines, cars, laptops, clothes, mobile phones, right? So on. In services, obviously, these are things that are intangible, we can't see, we can't touch, right? But these include things like education, healthcare. I've just given you some examples, right? Services, where services are involved, those are all intangible. Exports and imports of services, right? Easy. Is everyone clear on this? Okay. Now, this being said, let's first understand how the recording thing works, how transactions are recorded in balance of payments. So every transaction will have two effects. If anyone of you have ever taken accounting, you would know that there is a concept of double entry, right? So there is double entry principle in accounting, which basically the way it's designed is that every transaction has two sides to it, right? There's a debit side to it, right? And there's a credit side to it. So that is known as double entry principle. That is known as double entry principle, right? Okay. Now the thing is, the two sides need to be recorded twice, right? The two sides need to be equal. Now think about this. When you export anything, now listen to this very carefully. When you export something, that results in cash inflow. Now, as far as the balance of payment is concerned, every transaction is looked at whether the money is coming into the country or whether the money is going out of the country. Whether the money is coming in the country or whether the money is going out of the country. So if money is coming in the country, that is known as obviously cash inflow. If the money is going out of the country, that is known as cash outflow. So cash inflows will be recorded as credit entries. Cash inflows will be recorded as credit entries, and cash outflows will be recorded as debit entries. Students, are you getting me? Now, anything that brings cash into the country, that will be recorded as credit entry, and anything that takes cash out of the country, that will be recorded as debit entry. Now, let me give you an example. If Pakistan is exporting wheat to UK, if Pakistan is exporting wheat to UK, would that be from Pakistan's point of view, in Pakistan's balance of payment, would be recorded as a credit entry or would be recorded as a debit entry? If Pakistan is exporting it to, another country, right? We will record it as a credit entry. Excellent, right? Because our exports bring us cash inflow. Please, are you getting me? So anything that we export is bringing us cash inflows. That's why we will record it as credit entry. In our, like Pakistan's balance of payment, will record it as a credit entry. Similarly, UK, if UK is the importing country, then UK will record it as debit entry because for them it is cash outflow. For them, for UK, this is cash outflow, so they will record it as a debit entry. Easy? Is this simple? Does it make sense? Right? And similarly, when we import something, let's say we are importing machinery from USA. So if we are importing machinery from USA, we will record that as debit entry in trading goods. We will record that as debit entry in trading goods because we are importing. The good is coming in, but the cash is going out. So since whenever we import, there is cash outflow, that's why we record it as a debit entry. That's why we record it as a debit entry. Students, is this simple? Is this clear? Any confusion so far? Anything that's not clear? Right? We good on this? Okay. Now moving forward. Think about this, right? Okay, very good. Now, income. What do we record in the income section of current account? Now, listen to this very carefully. Any income, let me write down the definition over here because then it gets a little tricky. Income includes income earned by foreign held assets, by Pakistanis on foreign held assets. Now I'll tell you what that means. Held assets and income earned by foreigners in Pakistani held assets, right? Earned by foreigners by local, by foreigners on local, held assets. Students, are you getting me? Right? So let's look at this definition one more time, right? Now, what is income? Now, listen to this very carefully. No. Exactly. That is what I was about to explain. So there's a slight difference, Abdul, between remittance and income. And let me tell you what that means. Now, if you earn income on a foreign held asset, think about this. What is remittance? Remittance is if any of your family members or anyone from Pakistan is working abroad, like they're employed. They are what? They're employed over there, right? So they're working, let's say a lot of Pakistanis, Indians, and Chinese are working in Amazon, Google, Microsoft, and so on. Now, whatever they earn, that would be part of remittance and that will be part of current transfers. Now, please listen to me carefully. Any income that Pakistanis and Indians and other country nationals are earning in USA, that is a remittance. When they're employed over there, they're working in foreign companies, whatever salary they get, that is remittance. And that is part of current transfers. In the income section, the idea is different. In the income section, the idea is income includes income earned by Pakistanis. Income includes income earned by Pakistanis on foreign held assets. Now, what can be a foreign held assets? On foreign held assets. So let's say if any Pakistani owns some property in UK or USA, right? So most probably they will earn rent on that property. So that will be inflow for Pakistan. That will be recorded in the income section and that will be recorded as an inflow. Why? Because the money is coming in. Right? And similarly, if any asset is owned by foreigners in Pakistan, let's say any foreigner owns any commercial building on some property in Pakistan or some business in Pakistan, and whatever income they earn on that, that will be recorded as debit entry for Pakistan because the money is going out of the country. How many of you completely got this? Let's look at this one more time. Students, this is confusing. That's why I am trying to take it slow. Now, think about this. What does income section include? What does income section include, right? Very good. Preet, are you following me? Income section includes income earned by Pakistanis, right, on foreign held assets. So if any Pakistani, we are looking at the balance of payment of Pakistan. So if any Pakistani owns any property in any other country of the world, whether that be USA, UK, China, any country, right? And if these Pakistanis are earning any income on that, right? So that will be recorded as a credit entry because that means money is coming in. That will be recorded as a credit entry, students. Why? Because the money is coming in. Yes or no? Money is coming in, right? And if any asset in Pakistan is owned by a foreigner, right? So whatever income they earn on Pakistani asset, that will be recorded as debit because technically the money is going out of Pakistan. Right, exactly. The assets can include the money in a foreign bank, or that can include, stocks invested. Exactly. It does include that. Yeah, that's correct. Abdul, right? So it's not only the physical asset, like a piece of land or something of the sort. It can also include things like business. It can also include things like, stock, money invested in the stock exchange or money put in a foreign bank. So all these things are also considered as assets. Easy? Okay. Now, this being said, now let's move on and talk about current transfers, right? Now, what are current transfers? Now, you have to pay close attention. So current transfers include basically two things: government level transactions, and so basically there's a word used for it, and that is known as unilateral transfers. So what is unilateral transfer? Let me write this down first and then I'll explain you. So current transfers are unilateral transfers, which includes government level transactions, which includes government level transactions, like receiving and paying aid, receiving and giving aid, and remittance. And or paying remittance. Just a second, right? Okay, now students, think about this. Now, what is happening over here? One-sided transfers, excellent, excellent, right? Exactly. So this is what unilateral transfer means, one-sided transfer. Think about this. So in case of export, if we are exporting something, so we give the products out, but in exchange, we receive the money. Please pay attention. There is bilateral transfer and then there's unilateral transfer. So bilateral transfer is basically there are two sides of the transaction, right? So if we are exporting something to another country, then in exchange of that exports, we do receive money, we do receive cash. Yes or no? That is why it's known as bilateral. There are two sides of the argument. You give goods, you receive money. In the case of unilateral transfers, there is only one side of the transaction, right? Either you're receiving money or you're giving money. In exchange of what? In exchange of nothing, right? So think about this. Every time my family member or any Pakistani who's working abroad and they're giving us remittance, so that is one-sided, because in exchange of that remittance, we are not paying them anything, not expecting anything in return. Exactly. So that's what I'm explaining. Very good, Preet. Right? So students, are you getting me? So when Pakistanis working abroad send money to their families in Pakistan, that's money coming into the country, and that will be recorded in the current transfers as cash inflow. That will be recorded in current transfers as cash inflow, right? And on the opposite, when any foreigners are working in Pakistan, let's say Chinese or anyone, and they send their money back home, that will be also a remittance, right? That would be remittance going out of Pakistan, and that will also be recorded in current transfers, but as an outflow. That will also be recorded in the current transfers, but as an outflow. Easy? Right. So where do we include IMF loans? It will be recorded over here. No, not in services. It's not recorded in services. All type of loans. Exactly. That's the second thing that we're coming to. Abdul, all type of loans that you receive either from another country or from international organizations like World Bank, IMF, and so on. So all these loans are received, loans that you receive are recorded in the current transfers. So the first time when you receive that loans, would that be a credit entry or a debit entry? For the first time when you receive a loan from, let's say, IMF or World Bank, would that be a credit entry or a debit entry? That would be a credit entry, right? Because money is coming in. Money is coming in. But loans have to be returned in the future. Then it would be right. In future, when you paid back, breathe, one time initially when you receive the loan. So that is just one side of the transaction, right? You're receiving money. So that will be inflow. But in future, when you pay back that loan, that would be a debit entry because money is going out of the country. Preet, does this help? Is this simple, students? Right? Now let's do a quick recap. If there's any confusion, please ask me. Right? So we said that balance of payment is an official document that records all international transactions of a country. So all international transactions that are taking place in a country will be recorded in the balance of payment of a country. And now it has three accounts. What are the three accounts in balance of payment? Current account, capital account, and financial account. In current account, you have four subsections. What are the four subsections? Trading goods, trading services, income, and current transfers, right? Okay. Now, as far as trading goods are concerned, this section only includes exports and imports of goods, tangible goods, right? Like vegetables, fruits, laptops, phones, cars, and so on, right? So if the money is coming into the country, that will be a credit entry. If the money is going out of the country, that will be a debit entry, as simple as that. Bank or cash has increased. Bank or cash has increased by receiving loans, but liability has also increased. So will it be a single entry? No. Okay. So Preet, you're confusing it with how it happens in accounting. So in accounting, yes. So when you receive a loan, so you make a double entry of cash as debit because cash is coming in, to loan being credit because loan is your liability. You're very right, right? This is how it works in accounting. But in economics, when we're making the balance of payment, so we will divide it in 2 times. The time we receive cash, that will be just credit entry because money is coming in, and the time period when we pay back that loan repayment, that will be recorded as a debit entry. Are you getting me? So you're very right that in accounting there will always be 2 sides, but in balance of payment, once we receive, when we receive the loan, that will be part of only the credit side, and in the future when we pay it back, that loan will be recorded in the debit side. Got it? Students, in a bit I'll show you how that works. In a bit I'll show you some sample values to help you understand how this thing works. Easy? Okay. Now students, trade in goods, you record just the exports and imports of goods. Trade in services, exports and imports of services. Income we have already talked about. Income records the income that Pakistani nationals are earning on foreign held assets. That will be an inflow because money is coming in our country, and any income that foreigners earn on our local held assets, that will be that will be debit entry, cash outflow, because money is going out of the country. Then you have current transfers. So what we have on current transfers? Current transfers are unilateral. Current transfers are unilateral transfers, meaning one-way transfers, which includes government level transactions like receiving and giving aid and receiving or paying remittance, right? So every time we receive loan or receive aid or we receive remittance, that will be inflow, and every time when we pay loan, when we pay remittance, that would be outflow. Easy? Students, is this simple? Any confusion so far? Anything that's not clear? Good on this? Okay, now moving forward from here. Okay, very good, excellent, right? We'll quickly jump to capital account, and then in tomorrow's class, we'll complete off with financial account, and then do a sample question. Like I'll show you how the values are actually recorded and all that stuff, so that you can better understand what is actually happening, right? Now, students, think about this. Now, in the capital account, you record sale and purchase of assets by individuals, right? So when individuals, which means people like you and me, buy an asset or sell an asset in another country, that will be part of our capital account. Now let's come to this and let's have a look at this, right? So capital account. So capital account is records sale and purchase of assets in a foreign country, right? So every time you purchase an asset, think about this. Every time a Pakistani purchase an asset, let me give you an example so that you get more clear. So let's say Mr. A is a Pakistani national and he purchased an asset in USA. Are you getting the example? So Mr. A is Pakistani national and he purchases an asset in USA. Would that be recorded as credit entry or debit entry? Would that be recorded as credit entry or debit entry? Students, what do you think? If Mr. A is a Pakistani national and he, buys something in another country, let's say USA, what do you think? Come on, is the money coming in or is the money going out? That will be a debit entry. Excellent, right? So for Pakistan, it will be a debit entry because technically the money is going out. Exactly, right? Is it simple? Right? And when any Pakistani later on, let's say in future, he wants to sell that assets, or he sells his asset in USA, right? Then that will be a credit entry because at that time the money will come into Pakistan. At that time, it will be an inflow. So initially, when you purchase any asset, that will be a debit entry. And later, when you sell it, like I'm talking from Pakistan's point of view. So when the Pakistani national buys any asset in USA, right? So let me write this down. Buys an asset in USA, that will be debit entry. And when you sell it later on, well, let's say when in future this person sells off that asset, that will be a credit entry. Easy? Is this simple? Any confusion so far? Anything that's not clear? Right? So the capital account, unlike current account, which has multiple subsections, in capital account, there are no subsections. There is only one type of transaction that is recorded in capital account, and that is sale and purchase of assets. That records only sales and purchase of assets in a foreign country. Easy? Students, any confusion so far? Right? So if this is clear, is this clear or not? Let me give you another example if you want to get a better idea. So let's say there is a Chinese person and he or she buys some asset in Pakistan. Would that be an inflow or an outflow for us? A Chinese person buying some asset in Pakistan. Right? So when he buys an asset in Pakistan, would that be an inflow or outflow? That would be an inflow, right? That will be credit entry for us, right? For China, it will be debit entry because money is going out of their country, right? But coming in Pakistan, so that will be credit for us. In future, when this Chinese person sell off that asset, so that would be credit entry for China and debit entry for us, right? Easy? Okay, now students, if this is clear, let's move on and let's quickly discuss the third and the last type of account in balance of payment, which is known as financial account. Now, financial account, as the word suggests, it records investment transactions. Financial account records investment transactions between countries, right? Financial account records investment transactions in a country, right? Now, all types of investment can be divided in two major categories, right? All the different types of investment. Now, what is investment? You will know by now when a business, invest in capital goods and so on, right? When you're putting your money somewhere for the sake of earning a return. So when you're putting your money somewhere in the hope of making some return on that, that is what an investment is, right? Now, all investments, as I was telling you, will be divided in two categories: direct investment, and the other one is known as indirect investment. It's also called as portfolio investment. So just a second. So it will be direct investment. Just a second. It will be direct investment or indirect investment, which is also known as portfolio investment, right? Now, if you're not sure what's the difference between the two, let me explain you. So direct investment includes things like, let's say, Amazon open their business or their operations in India or China or Pakistan, right? That is direct investment. Directly, a foreign company is coming and setting up their operations in your country, right? So that is direct investment. On the other hand, let's say a foreign investor is putting their money in Pakistan, right? Or India or something, right? So that is indirect investment or portfolio investment. Students, are you getting me or not? That is an indirect investment or portfolio investment, right? So financial account will record both type of transactions. So if the money is coming in the country, that will be inflow, credit entry. If the money is going out of the country because any Pakistani is making an investment in US stock exchange. So if a Pakistani, now listen to this question very carefully, if Pakistani is making an investment in USA stock exchange, right? Abdurrahim, indirect matlab ye hai ki it's not directly into the business. So stock exchange, think about it. So what we were talking about right now, so if Pakistani is putting their money in a US bank account, or if a Pakistani is putting their money in a US stock exchange, that will be indirect because that is not directly opening a business. That has physical presence, right? So direct investment is anything with the physical presence. Indirect investment is in assets, banks, right? So that is what it means, right? Students, are you clear? So we'll continue from here in tomorrow's class. Be there on time, right? Have a good night, sleep, take good care of yourself. And then tomorrow we'll complete up with this, do some examples. and move on to the next topic then, which is international trade. Right? Okay. Thank you very much. Okay, Bob. Take care. Allah Hafiz. Take care. Bye.